So let's go ahead and enter the expenses for Lawnmowers Inc. The first expense was the $25 purchase of gas, which the owner paid cash for. So what I did here is I went back to the transactions page by clicking on accounting and then transactions. I clicked on the add expense button, and so far I've entered in the description box Conoco, where we purchased the gas. I'm going to leave this account right here at cash on hand. That's the correct account because the owner did pay cash out of his pocket. I'm going to go ahead and go with the default date, which is today's date, leave this as a withdrawal, and then enter in the amount as $25. Down here, under category, we need to choose the appropriate expense account. And you'll see that there are various accounts that Wave has already given us by default. And down here under expense accounts, we can see there is a vehicle fuel account. So I'll go ahead and choose that and then click Save. Now for the second transaction, that was for $5 and that was for the purchase of oil. And the business owner charged that purchase to his credit card. So we're going to put a different account here for that transaction. So I'm going to click on expense. Let's say he purchased the oil at Fred Meyer. I'll go ahead and leave the date on June 4th, put $5 for the amount. It's also a withdrawal. Money was being spent. And for the account, what we need is a credit card account. And so far, all we have is the US Bank loan account that we created in an earlier video. So we need to scroll down and click on Add a New Account. Now the type is, it is a liability, the credit card, and you'll see there is a credit card option here. And let's say this is a US Bank credit card. So I'll go ahead and type that in for my account name. Then I'll click Save, and now you'll see that's the account that this charge is being billed to. We still need to categorize the expense, so I'm going to click that down arrow, and looking through these accounts that Wave gave me by default, there isn't anything that really describes the purchase of oil for my lawnmower. And that's an expense that I'm going to be incurring on a regular basis. And so I'm going to go ahead and add a new account. And for the account type, I have to be sure to choose one of these options under expenses. Cost of goods sold is not correct. That's for the cost of goods or products that a business sells. I'm not selling the oil. I'm buying the oil and using it to run my lawnmower. So this is actually an operating expense. And then I can go ahead and give this account any name that I want. I'm going to be really specific here so I know exactly what type of expense this is. I'm going to call it oil for lawnmower and then click Save. Now I'm ready to finalize this transaction by clicking the Save button. So what I'd like to do now is show you how these revenue and expense transactions have affected the financial statements for this company. So I'm going to come over and click on Reports. And the first report I'm going to click on is the profit and loss, also known as the income statement. So we can see that for this period of time, which Wave defaults to the beginning of the year, so as of the beginning of January 2020 through June 4th, we've earned $100 in income, also known as revenue, And that $100 in income came from providing services. And we've also incurred a total of $30 in expenses, including the oil and the fuel for our vehicle. And the difference between the revenues and expenses is the net profit of $70 for this period. Now I'm looking at the income statement in detail view. This details box is clicked. I can just also click on summary and it provides more of a big picture overview of my revenue and my expenses. And remember, income is just another word for revenue. If I go to my balance sheet, the balance sheet is another very important financial statement. It shows the ending balances of my assets, liabilities, and equity account as of the end of a period, as of a date in time. So as of today, June 4th, we can see that I have cash on hand of $29.45. And if I click on that account, I can see how it changed. So it's going to open up all the transactions that affected my cash on hand. So remember, initially I collected $54.45, including sales tax, from my first customer, but then I paid $25 from my cash on hand for the gas, leaving me with an ending balance of $29.45. Now I'm going to close this tab and go back to my balance sheet. I also see I still have the $1,000 in my savings account at the bank. My second customer still owes me $54.45, which includes the sales tax. So here's my accounts receivable, and here are my total assets. My liabilities include the $5 that I charged to my credit card, and you'll see I have $8.90 in Washington State sales tax liability. So sales taxes, the minute you collect sales tax from a customer, you have a liability to turn that amount over to the taxing authority. In my example, the state of Washington. And I've collected a total of $8.90 in sales tax from my two customers. That money does not belong to me. I have a responsibility to turn that over to the state of Washington, which is why this total is showing up as a liability. And then finally, I have my bank loan of $1,000 that I still owe. So my equity then is $70, and that amount is the profit that I've earned this year, the revenues less the expenses. So this amount is the business owner's ownership of the business's assets. And by the way, the balance sheet is a representation of the accounting equation. Just like the accounting equation always remains in balance, the total assets on the balance sheet will always equal the total of the liabilities plus the equity. Let's take a look at two more reports, starting with the cash flow report. This is important because we always have to manage our cash carefully to make sure we have enough cash to pay our bills. And so you can see that we have $29.45 net cash from our operating activities. So this cash was generated by running our business, by earning revenue. And of course, our expenses reduce the amount of net cash from operating activities. We also have this net cash that was generated from our financing activities from borrowing money from the bank. And then finally, here is an overview of our cash. We began with 0 in cash, we had this much gross cash inflow, this much in outflows, for a net change of this amount. And here's our ending balance of cash as of June 4th. And then the last report I want to show you is the sales tax report, because it's so important that we pay the sales taxes owed to the state. We can generate this sales tax report to be sure we're keeping on top of what we owe. And so we see, again, we owe $8.90. And so we need to set that cash aside that we collected from the customers so that we're sure to have that amount to pay to the state when our sales tax is due.